All funds withheld by custodians, such as brokers or bankers, are paid to the US government. This is generally done on a weekly basis by the custodian. Once the funds are remitted, the agent can only get refunds from the IRS under special circumstances. Generally, reporting on investment income is due to both you, the owner, and to the US government, the IRS, on March 15th for the previous calendar year. Reporting for business income is due to you and the IRS on April 15th for the previous calendar year. If you own an interest in a partnership or LLC, even one that is publicly traded on the stock exchange, you will likely receive multiple US tax reports. Form 1042-S is used to report several types of income to non-US persons. The reporting is complex in this area. Not all income that is subject to reporting is subject to withholding. Earlier, we discussed investment interest. This is income that is reported but is not subject to withholding. Form 8805 reports business income. It is likely that you will receive multiple Form 1042-S's annually. The form reports only one type of income and associated withholding, if applicable, per form. Codes are used to indicate the type of income. The code for certain items, like payments in lieu, is determined by the type of payment it is substituting for. Form 1042-S reports on US tax withheld from the type of income being reported, if any tax was refunded or withheld by another agent than the reporter. Remember that once the 1042-S is filed and reported to the US government in March, the withholding agents cannot obtain refunds from the IRS. Form 8805 reports operating income earned by a US trade or business that you may own directly, such as a partnership, not publicly traded. Income and any withholding is reported, and these forms are due April 15th. If you own an interest in a US pass-through entity, such as a partnership, S Corporation or LLC, generally you may receive both an 8805 and a K1 partnership S Corp income reporting. This applies to publicly traded partnerships as well as closely held partnerships. Depending on the income, withholding and type of entity, you may be required to file a US non-resident tax return for this income.